welcome to our first webinar together with the Luxcess group. Guys, I'd like to take a moment to welcome you all here with me this evening. We have some fantastic content for you all planned tonight. Before we get started, guys, could I just please get a quick visual and a sound check? Could you just type in the box if you can hear me loud and clear, and if you can see my screen okay? Okay, fantastic. Welcome, everybody. Welcome. My name is Matthew Jones, and every Sunday we will spend about an hour and a half together each evening, each Sunday evening, where we will break down the markets together from the fundamental aspects to the technicals. And together, guys, we will plan some positions together, and ultimately we will make some great profits together over our journey. So, great to have you in here this evening, guys, and welcome once again. So, first of all, I would like to start off with a little bit about myself. So, as mentioned, my name is Matthew Jones. I have been active within the foreign exchange markets now for just under 5 years. I started, before I started my journey, I started my work life as an electrician. So I am 25 years of age. I started life as an electrician. So it wasn't the most fun job, should I say, back then. It was good, you know. At the time, it met my needs. But after some time, I wanted something that, you know, I could do a little bit more. Something that meant that I didn't have to work as hard. I didn't have to put in all of those hours. I didn't have to trade my time for money. And this is where trading became known to me. And I started to look more at the foreign exchange markets. And ultimately, this ticked the boxes. And ever since then, this is something that I have pursued over, as mentioned, just coming up to about 5 years now. This is something that I've pursued, something that I very much enjoy, and something that I want to share with you guys now every Sunday evening. So guys, it doesn't matter what level you're at. It doesn't matter if you are a beginner and you're new to the markets. It doesn't matter if you're more experienced and you have been in the game a long time. We will cater for everybody here. And guys, as mentioned, don't worry if you're new to this and you have a lot of questions. All I ask is you just pop those questions into the box. So there's a chat box that if you have any questions throughout the webinar, you can ask me and we can go through those together. In this industry, guys, in this area within the financial markets, we need to ask questions. Questions are what help us learn. And we are all in this together, guys. We are all in this together every Sunday evening to share ideas, to break down the market, and to help one another. So guys, if you have any questions, please don't hesitate to pop those into the group. Fantastic. So, as mentioned, I've been in the markets for now about 5 years. I've had the privilege to make some mistakes and to learn from those mistakes and to take those lessons and to put them into my trading day to day. I've been privileged to have that exposure within the market, and all of this experience is now what I'm going to give to you guys every Sunday. So every webinar that I do, guys, it follows a similar content. It follows a similar pattern. What we will do together is we will go through the economic events that have taken place, the fundamental events that have taken place in between our webinars. So of course I see you guys every Thursday, so of course we're just starting this every Sunday we're just starting this Sunday. So of course we can't review last week's content because this is our first week. So typically what we do is we start off by reviewing last week's content. So we'll look at any positions that we planned last week, and we'll look and review those positions. We'll see if they met the criteria, if they met our expectation, if they didn't meet our expectation, and ultimately we'll take a closer look to understand why they did hit our expectation or why they didn't meet our expectation. So then after looking at our trades, we will then move into looking at the fundamental events. So what do I mean by fundamental events? What you see in front of me sums that up perfectly. So we have multiple events taking place within the markets. Of course, the best way to explain the fundamental events is with something like Brexit, for example. There is a lot of confusion and a lot of uncertainty with Britain coming out of the EU. And that is a major fundamental event. So we take a look at different events that take place. Something as big as Brexit to something right down as small as retail sales data or inflation data. And don't worry if you don't understand it at the moment. Week by week, it will become more familiar to you. It will become second nature, like riding a bike. If you attend week by week, this will become the normal. And guys, we'll have some fun together through those weeks and ultimately make some brilliant profits together. So once we've looked at the last week's positions and the last week's fundamental events, we then look to the week ahead. We then look to the events that are taking place which could impact our trades. Any trades that we plan, we want to make sure that there aren't any events like these that could affect our trades. So we look to the week ahead. We break down the week ahead so that we are more prepared and ready for that week. So guys, we've got the format of what we will do each week. We will start off with reviewing last week's fundamental events and last week's trades, and then we will begin to look at the week ahead and look at the fundamental events that we're expecting for the week ahead. And then, of course, we will plan some trades. So we have our structure. We know what to expect week in, week out, every Sunday together as a group. That is what we will do. But we're going to explore other areas of the market as well. So what I'm going to do for you guys every Sunday is we will take a look at what's called the macroeconomic events. So these are the day-to-day fundamental events. These are day-to-day fundamentals. We're going to look at macro fundamentals, or the big picture, something like Brexit, something that I mentioned earlier, something like Brexit, or something like the Italian recession that we're just starting to see. Each week we will take 5-10 minutes to learn about something fundamental on the macro picture. Okay, so on the big picture. So each week we will take 5-10 minutes to look at something like Brexit, which is taking place, and we'll keep ourselves up to date with that. We'll keep ourselves up to date with the economic slowdown within the European Union, with Italy and France and Spain especially. Italy, of course, now in a recession. France and Spain also starting to slow down, as well as Germany. So, we'll take some time to look at that. And any major events that take place, we will break down together. Any events that take place, you will know what they mean. So you will be better prepared on how to react. So guys, should we get started? Should we start looking to the markets and see what opportunities we have? If you have any questions, guys, I'll always give you an opportunity to pop those into the box. So before we move through the segments, I'll give you a chance at the end just to pop any questions that you may have. Of course, feel free to put any questions in the group as we go, but I'll just give you that little reminder at the end of each segment. So now we are going to move on into the content that we have planned for this evening. Do you have any questions? If you have any questions, just pop those into the box and we can get started. If you don't have any questions, don't worry. That's not a problem. And of course, guys, if you think of something later and you think, oh, I wish I asked Matt that, please, there is no wrong time to ask a question. There is no right or wrong question. Just pop your question into the box. So, guys, as mentioned, we're going to start looking at last week's fundamentals. We're going to take a look at the fundamental events that took place last week, and we had some good ones. We had some good events take place to give you an insight about what to expect within the markets. So starting off Monday, we had the president of the European Central Bank, Mario Draghi. He was addressing the markets, and guys, for fundamental events, I use this website here, forexfactory.com. This is the website that I use to keep up to date with my fundamental news. Okay. So Monday morning Monday afternoon we had Mario Draghi addressing the markets, and if you click on the detail, he was due to speak at the European Parliament of Economic and Monetary Affairs Committee. So this was quite a big event that took place. This is quite a big event. So something like this has the potential to move the euro within the markets. So when this event took place at 2 p.m, we did start to see some volatility with the euro as a currency. We started to see the euro US dollar, we started to see the euro Japanese yen, and even the pound euro become a little bit more volatile due to this event. And guys, I won't bombard you with data at the moment, but week by week we'll start to take a look at what they were speaking about, what Mario Draghi was speaking about within that event, and we'll begin to break that down together. But tonight, don't worry about that. That will come as, you know, we get more and more familiar with the fundamentals. So when they start to become second knowledge, then we can start to really dissect the events and, you know, dig a little deeper and deeper to really fully understand what they mean. So this was a fairly volatile event. We did see some price action within the markets on the euro. Nothing too major, but a little bit of volatility nonetheless. Then we had Governor Mark Carney speaking for the Bank of England. And Governor Carney was just taking part in a question and answer session at the Bank of England's Future Forum. So something like this, we didn't see too much volatility with the pound. Although it is a red box and it's major data for the pound, we didn't see too much volatility. And that was because it was just a question and answer session. If it had been a statement by the Bank of England that Mark Carney was announcing, then maybe we would see a bit more volatility within the markets. But as it was just a question and answer, we didn't see much volatility at all. So moving on into Tuesday, we had CB consumer confidence for the US dollar. This has been falling steadily now over the past, I think, about 3 or 4 months. This was hitting 16-year highs at the time before that. So the data for the US dollar, this CB consumer confidence data, was very strong, and it was providing some strength to the US dollar. So when we saw good results with this with this fundamental event, we saw the US dollar begin to rally. We saw the buyers come back into the US dollar. But as you know, we have progressed over the past 2 or 3 months. We've come down from those 16-year highs, and we're starting to see some disappointing figures. So as a result, the US dollar did weaken off quite substantially. That pretty much rounds up Tuesday. We didn't have any other major fundamental events taking place. We had the Spanish unemployment rate, which is, slowly coming down, but still looking at 14.5%, still a large unemployment rate within Spain. But elsewhere on Tuesday, pretty quiet, pretty quiet indeed. Wednesday was much more volatile. So first of all, for the Aussie dollar, we had consumer price inflation data, or just known as inflation, and this was measured every 3 months. This is CPI Q-Q, which means consumer price inflation quarter on quarter. So this is the inflation data every 3 months. And we saw some good figures in there, just above the forecast, and the trimmed mean CPI. So if we look at this, this is excluding the most volatile 30% of items. So this will take out something like fuel and energy and tobacco and alcohol, and it will measure the more stable priced goods. So again, we saw some good data with that. 0.4% met its forecast. Again, the previous was 0.4%. So we're seeing some consistency with that data, and this did strengthen the Aussie dollar. We did see the buyers come into the Aussie dollar off of the back of this event. So moving into Wednesday evening, we had the big one. We had the major fundamental event take place. We had the FOMC. So the FOMC, they set the federal funds rate. They set the interest rates for the United States. The FOMC is the Federal Open Market Committee. So they are responsible for setting the interest rates, or the federal funds rate, as it's known. They're responsible for setting their monetary policy as well for the US, and of course they are the ones who decide whether or not to print more or less money. So if needs be, the FOMC and the Fed, the Federal Reserve, will decide to print billions and billions of US dollars if they need to stimulate the economy. And we keep a close eye on events like this. These are what are known as monetary policy events. And guys, monetary policy events, these are the big ones. These are the big events. These are the events that we see big price movements within the markets. And bear with me one moment. In the background, I'm just going to get up a chart for you on the daily so that we can see the full extent of, what these events do and how these events affect the market. So I just want to take a look here, and what I've done is I've just taken you over to the US dollar yen, and we're going to go back. We're going to go back to I think it was about 2014 on the daily, and there it is. Yeah, October, November 2014. This was a movement. Can you all see this movement here, guys? This movement here, this was a monetary policy announcement. This movement was made by monetary policy. And guys, although we see, although we see the big movement here, it doesn't just result in this movement. You know, in the days and the weeks after, we see that price rise and rise and rise. So although these are very powerful events on the day, they offer so much more opportunity than just on this day here. For the days and the weeks ahead, they offer even more opportunity. So that's an example of monetary policy and how it affects the market. So this is why we keep a close eye on events just like this, because it's these events that will create those movements. Those big movements that we saw within the markets are created by these events. And week by week, month by month, we will break them down even further. So we will take a look at monetary policy as a whole, and then we'll break it down even more. We'll look at monetary policy and the tools that they're using. So quantitative easing, printing more money, bond buying programs, buying government debt, stimulus programs, investing in infrastructure, investing in property, real estate, and all these other different stimulus measures that come under monetary policy, we will take a look at together, and we'll take a look at it step by step, so it's manageable, so that we don't get confused, and so that we, you know, can move forward together as a team. So moving into Thursday, it was a bit more quiet. Although we had all of these events here, they weren't major events. So the red box shows us the major events to take place. So although it looks quite busy on Thursday, it was only this data that we had to concern ourselves with. Oh, this data here. GDP month on month, gross domestic product month on month for the Canadian dollar. This actually met the forecast. It was, although it met the forecast, it was lower than the previous figure. So we did start to see the Canadian dollar sell off a little bit. Other than that, pretty quiet on the Thursday. Again, it was Friday where we saw some big data. And this piece of data that took place on Friday is quite special. It's quite unique. It only happens once a month, and it can impact the markets quite severely. So we need to be aware of this. We need to be prepared. So what data am I talking about? Well, I'm talking about non-farm employment change data. This is known as non-farm payroll. And this is the total number of people employed for the previous month. So excluding agriculture, and that's where we get the non-farm. So this is all of the employment change outside of the agricultural. Okay, so this is all the people employed in cities, in the factories, in offices, in the police, in the services, the fire brigade, the ambulance service, the hospitals. This is all of those people employed each month. And this is a big event, because what we need to see is we need to see that there are more and more jobs added every month. If we see that there are more and more jobs added, we know the economy is strong. Guys, you know the economy is strong if it's easier to get a job. If more people are hiring, that means companies have more money to spend, and the economy is healthy. When the economy starts to become unhealthy and the economy starts to slow down, those companies aren't able to take on those jobs. And some companies, of course, end up making their employees redundant when times get really hard. So this piece of data gives us a fantastic insight into the strength of the US economy. So for that reason, guys, we keep a very close eye on this. This isn't something that we want to chance. This isn't something that we want to leave to fate. This is something that we need to be aware of, that we need to prepare for. So in this instance, we actually saw some fantastic figures for the US dollar. Now, if we look at the previous as well, the previous was actually revised down from 312. It actually came out at 312 last month, and they revised that to 222. So it wasn't as good as they initially thought. This time round, we've seen some strong figures again. We've seen 304,000. So again, we saw some good data coming out of the United States. The US economy had added 304,000 jobs in the month of January. They are some amazing figures, 304,000 jobs. And as a result, this began to strengthen the US dollar when this news came out. And we saw a lot of volatility. Elsewhere, we saw average hourly earnings, so wages slightly decreased month on month, and the unemployment rate actually increased ever so slightly as well. Although they had added 304,000 jobs, there had been a greater number than they expected had lost their jobs as well. So a bit of what we call 6 of one and half a dozen of the other. Of course, 6 of one and 6 of the other. So it was although we had good figures out for non-farm employment change, and 304,000 people got jobs for that month, when it was expected that only 165,000 people would become employed for January. So they almost doubled that figure. But the unemployment rate was expected at 3.9%, but it was actually 4%. So unemployment has risen, something that they didn't expect. So therefore we had a little bit of a mix. Although we had good non-farm employment change data, we had bad average hourly earnings and bad unemployment data as well. So we saw some uncertainty for the US dollar, and let's take a look at that. Let's go on to the 30 minutes. Oh, apologies, guys. And where are we on the data? Let me pop it onto the hourly. So this is 2 hours behind. Here we go. So it was this candle here, on the hourly candle here, on the 1 o'clock candle. We saw that initial movement to the upside, but then we had that wick to the downside. So we had that uncertainty in the market, where we had the good data for non-farm employment, but then we had the bad data for unemployment and average earnings. So we saw some interesting movements within the market. And then finally, we had some manufacturing data for the US dollar, ISM manufacturing PMI data. So PMI is a Purchasing Managers Index. This was the ISM manufacturing data. So this was good. This exceeded the expectations, and as a result, just if we go back to that chart, we saw the buyers come into the US dollar, off of that data at 3 o'clock there. The buyers came into the market off of that data, and we saw a good bullish movement to the upside. So there's a good couple of examples of how the data affects the price. So guys, that is why we need to be prepared. That is why we need to do our homework. And if we do our homework and we are prepared, then ultimately we will profit. So let's take a look at the week ahead. What are we expecting? And guys, then let's plan some positions together. Let's take a look in the markets and plan some positions. So what do we have Monday morning? Well, Monday morning, it's a quiet morning. We don't have any major data expected. Monday afternoon, again, a quiet afternoon. We don't have any major data expected. So Monday, there isn't anything expected that could impact our trades. So if we're in a trade, we don't want news to come out and move the price uncontrollably. We want You know, we don't want to be in through these events on a small time basis. On a larger time frame, then yes, you know, we can stay through those positions, but we need to be aware. So Monday morning, there isn't anything major that could impact our positions. You know, it doesn't mean that if there is, that we have to get out of our trade. It doesn't mean that at all. It just means that we need to be aware. We need to see if it could impact our trade, and then if it could, then we reanalyze our trade and see if it still meets the criteria. If it still meets the criteria, you know, we can hold that position. We don't need to change. But the important thing is that we check. The important thing is that we double check our trade position. So Monday, there's nothing there to make us double check. There's nothing there that we need to double check in regards to the fundamentals. Tuesday, however, the Aussie dollar has data. We see retail sales data and a Reserve Bank of Australia rate statement. And guys, what we have is we have that monetary policy once again. We have the interest rate or the cash rate for the Reserve Bank of Australia, which is at 1.5%. They don't expect that to change, but we could potentially have some new information to affect the Aussie dollar. Where it's that monetary policy, and you know, as we mentioned, monetary policy has the potential to move the price majorly, to move the price, you know, very quickly and very powerfully. We need to be prepared. So the rate statement for the Aussie dollar. So in the early hours of Tuesday, I don't really want to be in a position with the Aussie dollar. So as a result, you know, maybe this evening, I'm not going to look at the Aussie dollar. Maybe I'll leave that until Tuesday to have a look at the Aussie dollar after this data has been released. Maybe I'll reanalyze the Aussie dollar at that time. So where we have some big data expected for the Aussie dollar, is not something that I want to become involved in. So I'm not going to look to plan a position with the Aussie dollar this evening, but that still gives us some fantastic potential for the week ahead. Likewise, we have the governor of the Reserve Bank of Australia, Governor Lowe, is speaking. So, you know, this is just confirming it to me, guys. This is just confirming what we said. We don't want to be really in a position. Well, for me, I don't want to be in a position with the Aussie dollar over Tuesday and Wednesday, because this is major data. This is monetary policy data. So it's not something that I'll look to, you know, look over the Aussie dollar for this evening. Elsewhere in the evening, we have employment change data quarter on quarter, and we have unemployment rate data as well for the New Zealand dollar. Unlike the monetary policy, of course, the monetary policy, we were just talking about how it can move the price very powerfully, how it can move that price very quickly and very powerfully in a short amount of time. something like employment change data or unemployment rate data doesn't quite have the same effect. Now, it can move the market, but it's a lot less volatile. So something that's a lot less volatile, something that doesn't go up and down and up and down and up and down, or very powerfully in one direction, we can look to accommodate ourselves. So we can, although we have this data expected for the New Zealand dollar, although we have employment change data and unemployment rate data for the New Zealand dollar, I don't expect it to move the markets as much as this data for the Aussie dollar. I expect this data to move price more powerfully than this data will, than this New Zealand data will. So the New Zealand dollar is something that, we could look at this evening, and there is a potential opportunity that I want to share with you guys this evening with the New Zealand dollar. Moving into Thursday, we have the chair of the Federal Reserve, Governor Jerome Powell. He is speaking at a town hall meeting for teachers. So although it is the chairman of the Federal Reserve, Jerome Powell, he is not speaking about monetary policy. He's not speaking about interest rates. He's not speaking about, the number of jobs that have been added. He's just speaking at a town hall meeting with teachers. So I wouldn't expect this to be too volatile. I wouldn't expect to see major price movements from this data event. So the US dollar is something that we can look at as well. We don't need to stay away from the US dollar, because this event, the governor of the Federal Reserve is just speaking at a town hall meeting. So we don't need to worry about that too much. And then Thursday we have the Bank of England interest rate decision. We have the MPC, which is a Monetary Policy Committee, deciding whether to increase or decrease the interest rates for the United Kingdom. And these events, guys, are very powerful. This is a monetary policy event. As you can see here, the monetary policy summary. We have the Monetary Policy Committee, the MPC, voting on the interest rate. So monetary policy has the potential to move price very quickly, very powerfully in a short amount of time. So the pound, trading the pound at 12 p.m. on Thursday afternoon is something that we want to be careful about. I wouldn't want to be in a position in the pound at that time. So if I'm trading euro pound, or if I'm trading pound US dollar, or if I'm trading pound against the Japanese yen, maybe I would look to close those positions before 12 p.m. on Thursday afternoon. The reason being It's a monetary policy event, and it has the potential to move the markets quickly. So Thursday could be quite adventurous within the markets. We could see some big movements there. And then finally, guys, it's just Friday. We have the Canadian data at the end. Friday afternoon, we have employment change and unemployment data. I wouldn't expect this to be too volatile. I wouldn't expect this to cause too many major movements within the market. So I think we're all right moving into Friday. So guys, we have gone through the events. There's a couple to watch out for. We have the pound on Thursday afternoon. You know, we're going to keep an eye on this, and we're going to keep an eye on Tuesday for the same with the Aussie dollar, the cash rate, the interest rate, and that rate statement, all monetary policy data. So Thursday and Tuesday, guys, those are the days we need to be a little bit careful. Other than that, we've analysed the markets. We've set out our territory. And guys, now it is time for us to, you know, look at some positions within the market. So I just want to take you to the first chart, and this is the US dollar Swiss franc. Okay, and I'm actually going to take it back quickly, and we're going to take a look at what is the US dollar index. Now, this is the US dollar measured against a wide range of currencies. This is the strength overall of the US dollar. If the dollar index is weak, the US dollar will be weak. If the dollar index is strong, the US dollar will be strong. So this gives us a good idea of what to expect. So we can see that from last week, the dollar sold off quite a lot, quite powerfully. The sellers were in control. They broke the support at the 96 handle and pushed prices below that level. They even broke the resistance area 95.45 down to about 95.37. They broke that area as well. But on Thursday and Friday, we started to see a little bit of strength come back into the US dollar, and that was because of that data on the Friday, that strong data that we saw last Friday for the US dollar. So what do we have? Well, given the recent price behavior, what we have is this area of consolidation. We have this area of consolidation here. The sellers then push prices below that area of support. We then retest this area of support, of resistance, sorry, and then go down to test this new area of support. So the US dollar overall is pretty weak on a macro picture. It doesn't look too good on the macro picture. The monthly as well, not looking too good there on the monthly. So you know, we're starting to see this fairly weak picture taking place over the US dollar. So this is something that we can look to exploit. This is something that we can look to keep an eye on and look to make, ultimately, to make some profit off of this. And I want to show you how. There we go. Apologies, guys. One moment. Okay, fantastic. So going back on to that dollar Swiss, looking at the dollar Swiss, we're looking at what we were looking at was that weak US dollar on the bigger picture. We're looking at the weak US dollar on the bigger picture. So what are we looking at here? We're looking at the daily and the dollar Swiss. We've seen this bearish movement down here, these lower lows, these lower highs, this bearish movement to the downside. We saw a break above that channel, some retracement behavior, a break to the upside, but the sellers came in from these resistance levels and pushed the price back to the downside. Between 99.79 and 100.06, we have an area of supply. What do I mean by an area of supply? Where it's where the sellers enter the market, where we get more sellers than buyers. And of course, guys, the markets work on supply and demand. When there is more demand, when there are more buyers within the markets, we see the price rise. When there is more supply, when there's more sellers in the market, we see the price decrease. So we saw the US dollar Swiss approach this area of supply, and the sellers came back into the markets. So I think there's good opportunity to take another sell position from a retest of this area. Okay. Okay, fantastic. So what we're looking for is an area for us to look to enter this trade. If we know that there's this area of supply between 99.79 and just above that parity level, just above that 1-to-1 level, then we can expect the sellers to come back in from this level once again. And this is going to provide us with a potential opportunity. Now, guys, what I look for is I look for the best price possible. I want to enter this trade at the best value possible. So I'm not going to wait and, I'm not going to, when the market's open, look to sell the US dollar Swiss straight away. No, I'm going to look to place a pending order at a better price and wait for that price to get to my order and to trigger my order. So as you can see, we have this area, let's go from the 99.80. Let's take the time frame down. Let's look at this level. Let's look at it on the hourly. There we go. So we can see, from this area, apologies. From this area, we can see the buyers start to struggle and the sellers come into the markets. And this is where it offers us those good opportunities. We want to look to enter the market not where the price is now, but up towards these levels up here. We want to get that best price possible. We want to enter at these areas of supply where the sellers come into the markets and push the price down. And again, we can see that behavior 99.80. Once again, the supply coming into the market here. We did break that level, and it went from being resistance to being support. We broke above that level, traded above, and then it was used as support. So again, that 99.80 level offers us some fantastic technical opportunities. So this is something that I would look to take within the market, guys. And this is something that I am going to look to take within the markets. So I think this is something that we can set up together this evening. So what I'm going to do, guys, is just put a label on the chart, and we're going to put a couple of labels on there, and what we will do is apologies, guys, one moment. Apologies, guys, 1 second. So what we're going to do is we're going to pop a text onto our chart, and what we're going to do is of course we're going to look for our entries. So as said, this is something that I'm going to look to trade for the week ahead. This is an opportunity that I am interested in taking, and I want to get the best price. So for me to get the best price at 99.80, I need to place a sell stop for my position. A sell limit, sorry, a sell limit order. So what I'm looking to do is put a sell limit order into the market. Oh, apologies, guys. And this sell order limit is going to be at that area of supply that we've identified, that 99.80 level. But we're just going to come a little bit below that. Sometimes it doesn't always get to those levels. So what we'll do is we'll just pop it a few pips below. We have a fantastic opportunity, and we have the opportunity for a tight stop on this position as well. So we don't need to be too greedy with this. We can be a little bit more relaxed. So I don't mind giving it a few more pips just to ensure that it picks us up into our order. So we're looking at 99.78 for our position. So we have our entry, we have our order, we have a sell limit order at 99.78. We need to put a stop loss in for that position. And guys, what we did is we identified that area between 99.80 and just over that one 10006. So what I'm going to do is I'm just going to put my stop loss above that area, above that 10006. This is a great technical area. We've seen from this level the sellers come into the market, so we know if we break this area to the upside, we break that supply level, we know the buyers will come into the market and we will be wrong about that trade. But this area, we should see the sellers come back into the markets, and this is what gives us a fantastic opportunity for this position. It gives us a very low risk to a high potential reward. So my stop loss, again, let's take it onto the daily. Oh, you know, I want to take it, my stop, above these levels. Above these levels here, above this zone at 10006. So that's where my stop for my position is going to be. We're going to place our stop loss at 10008, just a couple of pips above that level. So it gives us, for the position, it gives us about a 30 pip stop loss for that position. Fantastic opportunity. And what we're going to do now, guys, is we're going to look for a potential profit target. We're going to look for a potential area where we could look to take some profits, and immediately we can see, you know, this area around here. I'm just going to put a line in just so that, you know, you guys can see that a bit more clearly. Looking at these lows here, again, the lows of this price movement, again, the lows of this consolidation. You can see the price reaction over this 99 price level, and again, playing its role as support, playing its role as resistance, again, playing its role as resistance, again as resistance. So we have a good technical area here for an exit. It's all good for us to know where to get into the trade, but guys, we also need to know when to get out of that trade as well. So for me, the 0.99, and I'm just going to take it above that level, 0.9910 is my profit target for this position. So let's just get a label up there for our profit target. And that is at 0.9910. And that is our first position set together. That is our sell limit order, our stop loss, and our profit target. So guys, we have a potential 3-to-1 position. A potential 2-to-1 position. We have a 30 pip stop loss to a 68 pip profit target. So if this meets the expectation, I will gain 2% off of this trade position. I'm always consistent with my risk, and I will only ever risk 1% of profits. So 30 pip stop loss, a 68 pip profit target. If this meets the expectation, I will gain just over 2% profit. Now, I'll give you a moment just to take a screenshot of that if you would like to. Oh, apologies, guys. One moment, let me just get rid of that and there we go. Apologies. There we go. So if you want to take a screenshot of this trade position, I'll give you a moment to there. Just going to take a picture of that myself, just so I can get that set afterwards on my trading account once the market's open. And there's also one more opportunity I want to take a look at quickly for this evening. So this is going to be my main position for the week ahead, and that's going to be a buy position. A sell position on the US dollar Swiss. So I'm going to look to sell at the level of 99.78 with a stop loss at 10008 and a profit target at 0.9910. Okay. So, moving on quickly, and let's take a look at the next position that I have planned for you guys. So here we have the Euro New Zealand dollar, and what we're starting to see is we have a good close on this level. We've just closed above the support at 166.06. As you can see, this has been a very, big support level before over the past few months. And again, a previous resistance area as well. Again, that previous support level, 166.06. Do we have over this way? Again, a previous support area, previous resistance, previous support. So we've seen the Euro New Zealand dollar closed at a very interesting price, and on the daily, this offers us it's actually a harami candle, a bullish harami candle, and this is something that I'm going to be a little bit more patient with. So unlike setting that position outright on our previous assets, unlike the US dollar Swiss, where we could set that position, the entry, the stop loss, and the profit target, we're going to need to be a little bit more clever about our Euro New Zealand. The reason being is because we need to see a little bit more information. We see some good technicals at the moment, but we need to see that follow through before we can look to take any more opportunities to the buy side. So we've closed above this area of support at the 166 handle. We've closed nicely above that price level. So what I want to look at is I want to take it down actually into a smaller time frame, into the 4 hour. We're starting to see the buyers come back into the market, and this is what offers us such a good opportunity, is because of the significance of this price level that it's currently sat at, it offers us a good potential opportunity. So if it does meet the criteria, what we will begin to see is the buyers come back into the market again, and we'll start to see some good price movements to the upside, and this will be back off of the back of this demand level. So as I previously mentioned earlier, we had that resistance level, we had that supply zone on the US dollar Swiss. This is called resistance. So what we have here on the Euro New Zealand is something slightly different. It's the opposite. It's an area of demand. It's an area where buyers come back into the markets. It's an area of support. And we think of support and resistance kind of like floors and ceilings, if you like. If you stand in the room and jump up and down on the floor, especially if you're upstairs, the floor stops you from crashing down to the ground floor. This is essentially what support does. Support stops the price from moving any lower. So likewise in my house at the moment, if I jump up and down upstairs, then I'm not going to fall through the floor because the floor is supporting my weight. But if I broke through the floor, then I would hit the ground floor pretty quickly. So support stops the price from moving any further to the downside. But once we break that support, we do tend to see some powerful movements. But it's these support areas, these macro support areas, that offer us the best opportunities. They offer us the best opportunities to get into the market for the best value. So what am I looking at here? Well, let's take it down into the 4 hours. And we've looked at this demand zone at 166. We've looked at that demand zone at 166, and we've looked at that demand zone at 165.70. And this is where I'm going to look to take the opportunity. So it's from this area here, this area here is where I'm going to look to take that opportunity if it arises. So I just need to break this down just so that you guys can see this price behavior a little bit more clearly. Let's keep breaking it down again and again. There we go. So you can see the resistance. We can see that level playing its role. So now we've broken above that level, we're going to look to catch that on the retest. And what I would fully expect is, to see the price start to move to the downside before we start to see that movement back to the upside. And what I'm looking for is just something like this. So I would expect to see, a movement sort of back down from that level to retest this level here, and then a movement from that area back up to create those new highs, and maybe back up to these sorts of levels. So maybe back up to that sort of level around there, the 166.60. Again, we can see significance of that level as well. So I think there is some good potential opportunity to catch a movement to the upside, but this is something different. We need to be a little bit more patient with this. We need to just wait for it to meet the criteria. I need to await the price action around this level before making that decision, because we could fail, and what we could see is something like this. So we could see maybe I'm just going to delete this one quickly. What we might see is something like this. So we might see a movement to there, and then maybe some more consolidation like this, and then we could maybe see a movement down here, a retest of this, and then a failure to the downside. So I don't want to place an order just in case we get this kind of behavior. What I want to do is wait to see the price action that we get around this level. But this is going to offer us a great opportunity once again. It's going to offer us a chance to enter with low risk to high potential reward. We would be looking at about 45 pip stop for about 60-70 pips of profit. So about 1.5 reward to 1% risk. But we need to keep an eye on this price level together. So what I'm going to do, guys, what I'm going to do with this one is we're going to keep an eye on it. Okay, I'm going to keep you all updated. I'm going to keep in touch with Bex, and together we will keep you guys updated. And when it meets the criteria, we can set a position like we did on the US dollar Swiss. Okay, so this is slightly different. We need to be a little bit more patient, and we need to wait just that little bit longer. But if we do so, it's a higher probability that it will make some fantastic profits. So for that reason, guys, we're going to be just a little bit patient, and then we can look forward to making that profit when it meets the criteria, when it ticks the boxes. Then we can look to take the trade. Okay. Fantastic, guys. One question about Euro US, Euro New Zealand, selling from 167.60. Should you move your TP to 165.70? Not necessarily. This is only a small time frame trade. This is a counter trend movement. So what we have is we have this good downtrend here to the downside with a slight retracement on that, and all I'm expecting really is something like this. All I'm expecting maybe over the next week or two is to create that lower high, and then to create that lower low. But for me, I think there's some good opportunity for us to look to get in on this, on this sort of movement here, on this counter trend movement here. So there's only going to be a short profit for us, a short profit potential. But you know, if you're in your position and it's a macro position, you can be patient with that position and hold, because we'll look to be in and out quite quickly before we see any macro continuation. But if if you want to hold that position on a macro basis, then I would definitely recommend holding that position for further downside. The only reason is, of course, apologies, one moment. There we go, just so I can get zoomed out a little bit. We are creating these lower lows and lower highs on this secondary bearish movement. We've had very powerful bearish movement before. Very powerful bearish movement here on the Euro New Zealand. We're seeing this retracement, second bearish movement, and what this is doing is just creating a series of lower lows and lower highs. So all we're looking to do here is just take a secondary trending movement, get out of the market before the next high, and then we've taken our profit. But on a macro picture, I would expect further downside. So you can either be patient with the position and look to wait this out, or you can look to take some profit and then re-enter when the price comes back up towards these levels. So it's entirely up to you if you're in the short position. Fantastic position, great entry. So you can either take the profit now or look to just be patient, take the profit now and enter at on the movement to the upside as we create the next lower high, or you can hold that position and just wait out this movement here, what we're expecting. So it's entirely up to you. For me, my interest is just in capturing this counter trend movement. It's at a price area that has some fantastic value. It offers us a brilliant opportunity. So for me, I'm going to look to take that counter trend opportunity. But fantastic trade on the macro time frame. Yeah, so yeah, fantastic. Profit target of 164. That's pretty much what we've lined up. Yeah, down to those lows, at least down to sort of retest this area here is what I would expect. So on the macro picture, you might, I would definitely say then, in my opinion, Miha, I would recommend holding that position and waiting this out, and then taking, holding that to your profit target and waiting this movement out. For us and for me, I'm just going to wait for it to meet the criteria, and when it does, I can look to take this portion of the movement here. Fantastic, brilliant. That was a fantastic question. Guys, please don't hesitate to pop your questions in the groups, and we can go through those together. As we mentioned at the start, questions are how we learn. Questions are how we learn quickly, and how it helps us to learn. So you can always, guys, if you like to, you can always just put on anon for anonymous at the start of the message, and I'll keep your name private if you would wish to, if that's going to get you writing those questions in the box. then that's what we'll do. Brilliant, guys. So first of all, I want to say thank you for attending this evening and attending our first webinar here at Luxcess Group. I will see you back here next Sunday evening, where we will review the US dollar Swiss and we will review the Euro New Zealand dollar. And then we will look to plan more positions. And guys, I look forward to seeing you all back here next Sunday when we can talk about the profits that we have made this week. I wish you all a fantastic evening. Very, very well done. If you think of any other questions and you think, oh, I should have asked Matt that, you know, please don't hesitate to send them over to me. I'm in the Facebook group, so you know, please don't hesitate to put them in the Facebook group or send them over via private message, and we can go through those together. Thank you very much for the kind comments, guys. I wish you all the best. I wish you all a fantastic evening and a brilliant week. And I will see you all back here next Sunday. Have a brilliant week, guys. Take care and goodbye for now.